stock or ETF that everyone was hyping, and you either bought it too early or completely passed on it. Because for me, that moment was SpaceX, and it hit harder than I expected. This is SpaceX. This is on Seeking Alpha. This is after 2 days of trading when it started trading at about $136. Currently, it's at $192.50. It has pretty much been exploding. I didn't buy it after the first 2 days of trading and immediately started questioning my entire investing approach. Not because I don't believe in the company, but because it looked like one of those once-in-a-generation opportunities that everyone talks about after the fact. I build my portfolio around one idea: retirement income first, stability second, and long-term growth that compounds over years, not headlines. That means I'm not trying to catch every fast-moving stock, even when it feels uncomfortable, but SpaceX became the perfect test of that mindset. If you're enjoying this type of real portfolio decision breakdown, not theory, subscribe. I post weekly updates showing exactly how I'm building my retirement income step by step. And this is where my system gets tested in real time, because SpaceX had all the hype, massive upside narrative, nonstop attention, and that feeling that you had to act fast or miss it. But I had to run it through a simple filter I use for every position. 1, does it generate income that fits my retirement strategy? No. And 2, does it align with the time horizon I'm actually investing on? No, not really. So it really wasn't an emotional decision. It was just a question of whether it fits or it doesn't fit. And to be clear, this isn't me saying SpaceX is a bad investment. For someone else's investing journey, it could absolutely be the best vehicle they've ever owned. It just doesn't match what I'm building: income first, long-term stability, and a retirement framework I can actually plan around. This wasn't me judging SpaceX. It was me recognizing that my portfolio isn't built to chase everything that looks exciting. I'm building income streams that support my long-term goals and retirement, not trying to predict which story stock will pay off first. The hardest part of investing isn't finding good opportunities. It's ignoring the ones that don't fit your system, even when they look like they might work out. And staying consistent with that is actually what builds long-term results. And staying consistent with that is what actually builds long-term results. So I want to ask you, have you ever passed on a stock or ETF that later exploded, or bought one just because of hype? Now, I started in the investing game late. If you're new to this, my story is I went through decades thinking that just a 401k was going to be enough for me in retirement. It took until my later 50s to realize that wasn't going to happen. So I started investing in August of 2022, started small. So I'm playing catch up. So that's why I am dealing with a lot more higher yield investments, more riskier investments to build income to catch up with what I should have. So if you want to follow along as I build this retirement portfolio step by step, subscribe, like, add a comment, and I'll see you in the next one. But if you want to stick around, I do have this video here where I will go over what's in my boring portfolio, the one that doesn't provide that daily excitement of dividends, new income coming in. It's just my boring portfolio that just grows without me really thinking about it. Just investing, not big yields, but it performs surprisingly as good or even better than most of my income positions. Thank you for watching, and we'll see you in the next one.